All right. Hi, everyone. Great to be with you here today. And firstly, thanks to my panelists for joining us to talk around environmental sustainability and governance topics, and particularly the intersection with blockchain. And I'll come on to just why that's such a fascinating subject matter area in a moment. But let's maybe start with some intros from our panelists. Your name, your role, the company you're working at, the role you have, and really how the space that you're in intersects with blockchain. Tanya, would you like to start?
Thanks, Scott.
No. Might be a button.
Hello.
Thanks, Scott. Hi, everyone. My name's Tanya McKenna. I'm a senior manager at Ernst & Young. I work in Perth in climate change and sustainability services, which is a function of Ernst & Young of about 300 people across Oceania and 1,200 globally. I am not a technology or blockchain expert by any stretch of the imagination, so I guess the perspectives I'll bring to you today are more about ESG and sustainability, and I guess kind of understanding and bringing some light to how I think some of the challenges in our space can be solved and have to be solved through digital. And
can you all hear me?
Yes.
Yep. So my name is Gavin Stannett. I'm one of the product specialists at Powerledger. The product that I'm particularly working on is called TraceX, and TraceX is a trading platform for these things called renewable energy certificates. So these are certificates that allow companies to essentially meet their ESG obligations or targets. I personally have also not from necessarily a blockchain background, but have a fair bit of extensive experience in the energy space, and then I've kind of moved through from obviously being in Perth, we're a big mining, oil and gas city and state, and I've moved across through from those kind of areas into hydrogen, and now working at Powerledger, we're looking to try and bring renewable energy to everybody and make it as accessible across from a personal sense to individuals, but then also accessibility through organizations as well.
Thanks. Hello. I'm Les Delaforce. I'm a Gulmagin mid-north coast, South Wales originally. My background in... Is this cutting out?
A little bit more of that.
Cheers.
Start again, Les.
Les Delaforce, Gulmagin Dungani man from the mid-north coast of New South Wales originally. So First Nations entrepreneur, background in the space is back in 2016-17, co-founded a VC-backed Web3 startup, and we went on our second round right the 2 days before crypto winter, so that was a lot of fun back then. But since that time, after that exit, I started focusing on research and the impact on particularly community and DAOs and NFT that have on communities, but also First Nations entrepreneurs. Current work is mostly around NFTs for First Nations entrepreneurs.
Fantastic. Thanks, guys. So the reason why we're talking about this topic of ESG today, and I'll refer to it as ESG rather than the long form, is that I think as a society, you know, we're in this situation at the moment where we have some really big problems to tackle. If you look at the Edelman Trust Report and the Trust Parameter, which really looks at trust across society, trust is at an all-time low. We trust our governments less, we trust private enterprise less, we trust that people are doing the right thing. Many people have stood up here today and talked around the opportunity that Web3 and blockchains provide in terms of transparency, and proactively being transparent around what you're doing and doing it in the right way, and engaging and involving communities. And I think that's no more important than when it comes to the topics of decarbonisation, around sustainable business practices, and how we how we really flip the equity model when it comes to how a lot of these businesses are run, as we've heard from many companies today across music, art, and many other spaces. So that's what we're going to explore. And Tanya, I'd like to start with you. And as you said, so in your day job, you deal with a lot of corporates who are really, I think, struggling with how to improve some of the practices perhaps around environmental sustainability and governance reporting. Can you maybe share what you see when you go and talk to these companies around the maturity and some of the challenges they have, and perhaps some of the initiatives which they're thinking of to improve the way that the reporting on something like net zero, where are they at, where are they trying to get to, and what do you see as the opportunity in maturing their processes?
Sure, thanks, Scott. Look, this is a massive, massive area, and I think if we step back to the point you just made, we are in a planetary crisis, and ultimately everyone has a responsibility to do something, and there is a hell of a lot of responsibility on business to do something about that. And it's not only from a goodwill thing, it's from an actual business sustainability resilience perspective. It's also from, investors kind of saying, well, hang on a minute, that, the value of my investment is potentially going to erode over time if you don't do something about these issues, particularly climate change. So we deal in my day-to-day job, and I've worked in corporate sustainability in a mining business. I know what it's like. I know what it's like, trying to tell the story and convince stakeholders of the work we're doing in corporate Australia or around the world, in setting targets and then measuring performance against what we're actually trying to achieve. And I think, generally people may have had a trust in business at some point in time, but we see these kind of points in time where things really fall down. And Juukan Gorge was a really good example of that, where we all felt the impact of that on what, the impact of mining on cultural heritage, and we don't really see it, but then we hear about it and we think, well, hang on a minute, how is business kind of getting away with this sort of thing? And it's not just about net zero. This is about the impact of business on people, planet, the working conditions of people in supply chains, for example, and deforestation as another key topic. So, in my job, I've worked with Woolworths through to tiny mining companies who are sort of going, what do I do? How do we do this? And we kind of, I think where we need to go is that we need automation in telling the story. We need story, but we also need to cut the crap and the time that we spend in corporate Australia writing reports and dealing with manual data, because what that is ultimately leading to is incremental change, and we're running out of time. So, from my perspective, and I haven't seen anyone really do it well at all. I think there are a couple of examples of companies that are starting to use digitisation to start to, real-time audit data and look at supply chain sustainability and start to look at how can we prove to the end customer or consumer or investor all the way through the value chain that diamond or that cotton or that part of that vehicle was made ethically. It came from the right place. It had all the right environmental, social credentials in the way that it was manufactured all the way through. And I think that's where it's going. So from my perspective, I actually want to see companies spend less time reporting and using technology to cut the time and automate so that they can spend more time actioning the stuff that they need to do. Not seeing it, but I know that's where it needs to go, and so we're seeing a massive spectrum of maturity in how companies are approaching the issue.
Brilliant. And you speak very passionately there about this shift, which seems like a tectonic shift from current practices and just what's always been done. And obviously coming from an accounting firm, financial statements are audited today, but we need to see much more of that rigour and discipline go into the ESG reporting when it comes to that real integrity and the data lineage, because as you've talked about, data lineage is crucial when you look at supply chains, which is a massive part of that. Gavin, maybe a question for you now, and we've talked about net zero already. Tanya's touched on that. And I think one of the areas when it comes to technology and blockchains where we have seen companies actually being bold and rethinking the business models, along the lines of what Dave spoke about with DAOs and different funding models and ways to control and collect capital en masse, is in the carbon offset space. We've seen Climate DAO in Australia. We have Beta Carbon and others. Can you maybe talk a bit about why you see and how you're thinking about it at Power Ledger in terms of the benefits of using something like a blockchain and tokens to actually track these assets on a blockchain.
Yeah, so thank you. It's a really interesting point, and something that obviously this is at the heart of what Power Ledger does and what we're looking to grow into. So starting off, maybe just commenting on carbon credits. So you may or may not have seen, even just on the news last night, there was a sort of special 730 report that talked about issues with the validity and I guess the just how much confidence people actually have in carbon credits themselves. So for those who don't know, a carbon credit is a digital certificate. It's got a value, a monetary value, but essentially what it does is represent 1 ton of carbon that is removed from the environment. So those types of credits can be created. A very simple example is trees. So planting trees, planting forests, as we know, removes carbon dioxide from the environment. Understanding the types of trees and the types of soil and the types of growth, you can calculate or get some averages of how much carbon is removed per hectare or per square kilometre of land. Now, what people are looking to do, and this is now an international, a huge $1 trillion business by the time we get to 2050, but it's usually growing in Australia already and around the world. And the reason behind that is because farmers and landowners are able to monetize their land away from existing, so they can diversify their original farming practices, and they can start using utilizing things such as carbon farming, so demonstrating the planting of these trees. Now, what that allows other organizations to do is then offset their emissions. So while we look to a world as possible, because this is one of the fastest ways that we can decarbonize, there are obviously a lot of what we call hard to abate sectors, so sectors where we can't necessarily use electricity to perform the same task. Steel is a good example of that. The manufacture of steel typically produces emissions, and so to offset the emissions and create green products, companies are using carbon offsets. Now, one of the issues with these, again, is around the trust of carbon offsets. So being able to trust that the practice that they were originated from has been verified and audited, but then also as these certificates transfer from the owner or the original issuer of the certificate all the way to the company that's looking to purchase them to offset. So making sure that the certificates are only sold once, as an example. So this is a real life problem that has occurred with such instruments when they're in standard databases and transacted manually. There's occurrences where certificates can be sold to, so the same ton of abated carbon, for example, can be sold twice to a company who's looking to offset. So that clearly erodes.
Solved back a few years ago by Satoshi, the old double spend problem.
Exactly, and I think that's where this the linkage really comes into with the blockchain. So the blockchain was established to transact safely and reliable certificates of value, and whether it's a Bitcoin or a carbon credit or a renewable energy certificate, these are all just examples of certificates of value. And the blockchain, as we all know, has numerous advantages in the way that it can just add the trust, it can add the ease of auditability, and then it allows the entire market to grow with the, back with that trust element. It can bring that back to the industry, and then also apply the scale that we see coming with carbon markets.
Gavin, one of the terms that's often used in the blockchain or crypto space is fungibility, meaning two things are the same. One Bitcoin is the same as another Bitcoin. Is that true in the carbon space? Is 1 ton of offset carbon the same as any other ton in the offset market?
So, yeah, really, really interesting point. So the blockchain is very good. I'll maybe just start with answering exactly the nature of that. The standard of these projects can vary around the world. So 1 ton of carbon, sure, 1 ton of carbon is 1 ton of carbon, and it's very difficult or impossible to tell the difference between that. But the nature of the projects themselves vary in terms of the quality. So a big thing in the carbon markets is the quality of the offsets, and that's where it's really important to understand the role that the regulator plays in making sure that that the carbon practices or the carbon farming practices all meet strict standards. So one of the things that again with the blockchain is really useful is the fact that when the credits are tokenized, that the information associated with the credits is attached to the token. And so with that, not only maybe you have the value or the volume of carbon that's been offset, but you also hold additional information when it was offset, where it was offset, are there any other additional ESG benefits that come associated with that particular offset. And as you start to rack up the different attributes to those certificates, potentially the certificates have more value. So I think if you can demonstrate that, then it starts to differentiate the carbon credit product itself.
Fantastic, thanks.
I might just add in there as well that I think there are many ways in which you can offset carbon, and even just looking at quality from a nature perspective, you could have a monoculture of trees that will suck carbon out of the atmosphere, but you could also have a really biodiverse offset, which would not only provide carbon reduction, but it would also have more of a biodiversity benefit. And so those are ultimately worth more because they are actually doing more for the planet.
Good point. Les, we've got one for you now around probably more the G of ESG, around governance and communities. And I think we've heard a lot today from on stage of businesses who are really looking to, I would say, reset the equity model around how funds and monies and revenue are distributed back to communities, to artists, to creators and makers. Wondering if you can share a perspective from your research and project around where you see the opportunity in this space for communities.
Yeah, definitely. Thanks, Scott. I might swap microphones again.
Yeah.
Keep cutting in and out.
That's right.
Certainly, and I think we're starting to see a shift into more of a community focus as well. Over the last few years, from that 2015 to 17, it was really retail that led Web3, and now we're starting to see institutions really starting to catch up. I think even going back to that previous point around corporations and energy, it's really been there's a shift around decarbonisation, digitalisation and decentralisation, and a shift back to the consumer, which is exciting. And if you look at back in the late 80s and 90s when corporations were particularly focused on product and its people, there was this shift in that late 80s, 90s period where it then focused on shareholders and profit. So while this ESG is great, we've got this governance process for individuals where now it's really levelling the playing field for people that necessarily didn't have or weren't in a decision-making position previously, whether that's investors, being a sophisticated investor in Australia or meeting the asset test. If you look at the Sotheby's, there was not an exhibition, but there was purchasing of the US Constitution, and there was a community DAO that raised $40 million, and it was a hedge fund manager that purchased it for $47 million. But you had a group of individuals that came in collectively with the same goals in mind to achieve an outcome. So we're seeing now individuals having access here in Australia where you can invest in startups, and it's really levelling the playing field for people of diverse backgrounds. As a First Nations founder, from what we found, what I experienced in my startup a few years ago, and then shifting into that research aspect with out at UWA, particularly for artists and Indigenous artists, when 83% of Indigenous artwork is fake, it's $1 billion industry. And we were running programs in Sydney and we couldn't find traditional art within the CBD Sydney to provide to our international participants. But what we found is that those artists were being ripped off, or English was a second language, particularly in the northwest of WA, that a DAO will potentially eliminate that, obviously the middleman, but the ownership then goes back to the Indigenous founder or the artist, and that's not just Indigenous art, but then that's First Nations art or multimedia or music globally as well for all First Nations peoples all over the world. So I think we're starting to see this transition, even with some of the likes of OpenSea out there, from Web 2 to Web 3, but DAOs are that next level where for artists, whether it's multimedia, music or traditional art, they've got ownership of the platform, and they take their own profits, and they've got the decision-making capabilities within the structure of a DAO as well.
And in your research, Les, and your dealings with other First Nation people, what do you see as needs to be done to really help unlock these models? What leadership is needed to unlock this opportunity for First Nations?
Education is probably the biggest thing, and met the second other black fellow I've met in crypto last week from Collective Shift. So it was awesome to finally see another First Nations founder or entrepreneur in this space as well. There's a few more getting this space, but we're usually late to the party for a range of things, even in the investment period, particularly around equity investment. It's a booming sector right now for First Nations entrepreneurs, but that's been around for a long time. And there's a number of barriers that are quite significant for Aboriginal Australians. So I think education is one really key aspect, and that's what we highlighted in the research out of UWA, is how we can really level that playing field through education and then access. We were going to the point of actually using, this is back in 2019, but using Bitcoin within an Indigenous community to see where we can transact and where they've got ownership themselves, but to get ethics approval is probably going to be a little bit hard. But education is probably the first and foremost, and access is the second thing, and that's where we're trying to break down those barriers and provide that to not just us building this platform, a colleague and I, but it's really through the ownership of First Nations entrepreneurs of how to use Bitcoin. What's a wallet? It's as simple as that.
Great perspective, and as an industry, it's incumbent on us all to make sure that this technology is accessible and that we all give back and educate to others. Gavin, I've got one for you. I don't think we can stand up here and talk about crypto and blockchain and all things and not discuss perhaps the moose on the table around the environmental impact of blockchains themselves. I know this has been covered over other days of the conference, but I feel like, again, as an industry, we need to keep reinforcing and making a more nuanced message around this. Can you talk about how your Powerledger as a tech company playing in the energy transition space, how do you handle that conversation?
Yeah, thanks. It's a really interesting one, but also something that, as Powerledger being a sort of clean tech company, this is something that we've thought very carefully about, and just understanding, first of all, how we solve problems for our clients, but then also how do we limit the environmental impact of our own product and our own operations. So I think the main thing to really bring up here is 2 points. I think the first is around the efficiency of the blockchain process itself. And so what I mean by that really is just addressing how efficient is the transaction from an energy point of view. So per transaction, how many kilowatts or kilowatt hours are used for that transaction. And the second point is around the greenness or the emissions intensity of the grid or energy input that is used for the hashing process. So just starting on that first one, I think over the years, and it's a very short history here, but what you're starting to see is the evolution of different blockchains. And I think what's driving that can be 2 things. So one, the improvements of efficiency from a proof of work to a proof of stake. We're actually seeing that having really impactful change on energy efficiency. So it's just some numbers. The blockchain Bitcoin. So I think the numbers when I looked was about 700 kilowatt hours per transaction. Compare that to Solana, which is about 70 kilowatt hours per transaction. Actually, no, sorry, I've got that wrong. It was Ethereum at 70, and then Solana is almost negligible. So what you're starting to see is a real efficiency in the ability to store and hash the data. And I guess the first advantage really is, and this is probably what drives it, is as the process become more efficient, then they become cheaper because you're not using as much energy. But the second benefit to that is obviously the environmental impact that using it less energy has. So I think that sort of turns quite quickly onto that second part around understanding the emissions intensity of the energy source, and that's often driven primarily by location. So if it's grid-based, then understanding what the content of the grid is in that particular area. West Australia, as an example, is above average, global average of grid emissions intensity. That's primarily driven because most of our input comes from the coal-fired power stations. But then as you move to some of the other areas around the world, Sweden and Norway, we see an influx of organizations like Facebook moving there for the data centers. Now, it's no coincidence that they moved there. It's cooler, so the processes for the data centers can be more efficient, but they're primarily driven on hydro and green sources, so they're able to claim and be more energy and be cleaner in terms of their operations. And I think the same thing goes with blockchain and the transactions. So for Powerledger, one of the big changes that we're making is as a move from Ethereum to Solana. And one of the main reasons for that is, first of all, it's a faster blockchain, so we can conduct 50,000 transactions per second, which really helps with the trading of these environmental commodities. But also, it's a much more efficient process, and therefore creates less emissions, and it's a greener blockchain. And I think as we move through time, this will start to, as the spotlight continues to fall on energy-intensive operations, whether it be blockchain or any other industry, I think we'll start to see further pressure to improve the efficiency and reduce emissions.
Great, thanks. So I think we've got a little bit of spare time on our hands. So I wanted to just get your perspectives on WA's role in all this, and can we be a leader? So we're known globally as a leader in extractive value from the earth. How can we extract value from this shift that we need to make as a society to a more transparent way of reporting and managing? And then what does that unlock in terms of, global funds and investment dollars as Australia as an investable space and WA to that point? Any perspectives from you?
I'm happy to have a go at that. Just recently been appointed to the Premier's Jobs Task Force representing tech, and one of the key topics was Web3, which is really surprising. So there's a range of other industries in there, but from a Startup WA perspective, you've got Chamber of Minerals and Energy, Steel Association Australia, HIA, CCI WA, and there's almost this arms race between Sydney and WA about who'll come out on top as that hub. I think if you look in Sydney, you've got fintech, Melbourne's the creative sector, particularly within startups across the country, and also they carry their own weight when there's contributions of funding from their state government as well. So within Victoria, you've got $62 million to launch Vic, and it's equivalent of Startup WA. Whereas in WA, even though things are getting a little bit better, the state government is a little bit more focused on innovation. It's really a grassroots approach over here. Mining is still the focus, and in these conversations, it's certainly where we can drive change and really highlight, and supply chain is one of those really key issues this state will face, particularly when the borders were opening up. At that level, we're worried about what that would look like, and particularly around supply chain. But there's this race at the moment between the big VC firms that are doing an amazing job over east, like Airtree with their $50 million Web3 dedicated fund, to over here we've got Powerledger, for example, Supremacy Game a few weeks ago. I saw the team originally where it's one of the first times where retail can get in and effectively invest or contribute to their NFT gaming platform. That hasn't happened before across the country. So apart from Powerledger back in the ICO days in 2016-17, so we're starting to see, I think, a small shift. Back in those times of 2017 being retail driven, now we're seeing more institutional money being driven, but that's been at a corporate level, and most recently around banks. So if we're seeing a change with banks, and you'll start to see that flow on into other organisations and other corporates, I think it's really up to us, and also between us and WA, that is, and Sydney, about who will be that leader and who will take that mantelpiece. And I think over here, it's definitely that around governance, around the individuals themselves, it's really community driven, but we're starting to see that change around governance, around the state as well.
Tanya, we've seen with some of the mining companies, I think BHP conducted a trial with a blockchain-based supply chain company around transparency of iron ore, I think in the rare commodity space in particular. Is it true that we see a value differentiator when companies take a leadership position in transparency, particularly with, say, some of the EU regulation, and the reporting requirements there?
I would say absolutely. I think that like I said before, the time that it's taking to sort of prove credentials for companies in what they're mining or producing or manufacturing, if that's reduced, then there's benefit there. But it's more about who's buying the product. And to me, the huge opportunity for Western Australia in the mining industry is who are we selling to, and if we can really well, I guess, market and prove the credentials of the products that we're mining from the earth or creating over here into European markets that need that, then there should be absolutely, whether it's a preferential relationship with particular customers or whether there will end up being a price differential on that particular product, which we are seeing more so for lower carbon aluminium, lower carbon nickel versus more energy intensive product. Naturally, the leading companies in the world, which most of which are in Europe, etc., want the better product and are willing to target you and enter into more long-term kind of customer relationships with you, as well as likely pay more for that product. So there is so much opportunity, and to your point, Les, I think we are slower to the mark over here, but I feel like there's this undercurrent of entrepreneurs and creatives and collaboration within this culture that we have in Western Australia, and I think there's a huge opportunity particularly for the mining industry. We just need leaders, I think, in government and collaboration between all of us to sort of make this happen. And if it has to be through pilots or smaller sort of projects to start to prove what it could do. You've only got to look at some of the organisations that are coming out in WA now with the money and the talent that are coming through. So I think, I'm hopeful and optimistic. Yeah,
and it's a great point you make there, I think, in reference to some of the companies we've heard about today who are doing these things, right? They're not waiting, and oftentimes I feel like in the corporate space, in a lot of our conversations, this space is still seen as futuristic. It's too risky, it's too early, and therefore, we see from our corporate leaders, no one really taking the plunge or investing in that. Gavin, Powerledger must be talking to a number of corporates, large energy companies. How does, say, talking to you don't have to name names, but some of our homegrown energy businesses differ to, say, an India or a Thailand or one of those emerging economies in relation to how they perceive the technology?
So there's a few things that, or different ways, I guess, I could address this, but maybe the first one is just bringing it back to some of the aspects that we talked about already with carbon credits and these things called renewable energy certificates. So again, they allow companies to either offset their emissions or claim renewable energy for their operations. Now, the way that that's dealt with in Australia, for example, these are financial instruments in Australia, whereas they're not treated as financial instruments in the United States. So that is a really good example of access to or ease of entry into markets. Powerledger, we're looking to launch our TraceX product into the United States in a month or so. And one of the main reasons for that is how receptive the governments are in the United States and the regulatory bodies over there for adopting this type of technology. Taking it across to where some of our other projects are in the kind of Asian regions, Thailand and India, again, these are primarily driven by a sort of above ground reasons, and they allow us with the regulations that enable the type of products, decentralization of the energy systems. They allow products like the ones that Powerledger delivers to operate. So in Australia, it's definitely something that we are pursuing actively. We have a number of clients over east where Powerledger are transacting energy at the moment, and those are really good success stories. In terms of opportunity in WA, probably the big one for Western Australia, as I see it, is in the development of the hydrogen industry. And you almost don't go for a week without there being some sort of hydrogen-related content on the front page of the news. Andrew Forrest is a good example of that and the work that he's doing. But essentially, what that is doing is taking the renewable resources that are available in Western Australia, the sun and the wind, and turning it into something that can be transported to other parts of the world. So while the demand for energy here may be more limited because of lower populations, what we can do is take that wind and solar, convert it to hydrogen, and then export it to some of the more energy-intensive parts of the world. And so that comes back to everything that we've talked about around transferring a fungible commodity. You can't tell one type of hydrogen from another, but with the certificates that we've talked about being attached to the molecules as they're transported, that allows you to then differentiate a less carbon intensive molecule of hydrogen from a higher intensive carbon molecule of hydrogen.
Great. Well, unless anyone has anything else they want to contribute, we might leave it there, and hopefully you understand a bit more about that intersection between ESG reporting and blockchain. Thank you. Thanks to the summary.